What is up, everybody? Steve here. I hope you are doing well. Today I'm going to talk about solutions for people who are basically upside down on their mortgage, meaning you owe more than what the property is worth. Look, a lot of people run into different situations where they have to sell their property due to certain circumstances going on in their lives. It happens, and unfortunately during certain market conditions you might not have equity or enough equity in your property to do a traditional sale and basically walk away from the property. Now, there are different solutions to get out of a property, and we're going to go through these, but then I'm going to talk about a more creative solution, which is way better than a lot of these other things. So for one thing, we have to have an understanding of what basically owing more on your property really is, and different terminology. So different terminology we have is called you're underwater. I'm sure you guys have heard of that. Or you're in a negative equity position, or you're upside down on your mortgage. Now, I'm going to bring you guys through a scenario as well where this person is not necessarily upside down on their mortgage. They actually, the property is worth what they owe, but after we back out all the closing costs and everything else, they would have to cut a check at closing. And unfortunately, it's just not a reality for these people. So we're going to go through that scenario. But first, let's talk about the different ways of basically avoiding a foreclosure scenario. For one thing, you do have something that's called a loan modification, where if you guys do want to keep the property and you guys are in financial hardship and maybe the payment's a little too high for you guys, or let's say you guys miss some payments, you might be able to contact your bank and do a loan modification. Now, in order for a loan modification in most cases to happen, you're gonna have to go back through the pre-qualification process, showing that you have an employment and you have enough funds coming in every month to basically support that mortgage. The second thing is a short sale. Now, short sales is basically getting a bank to agree to allow another buyer to come in, buy the property, and that bank will absorb the cost, meaning the closing costs and any negative equity. Now, unfortunately, in many cases in this situation, people would have to, in some cases, would be delinquent on their mortgage. So basically, their month by month that's passing, it has a negative effect on their credit reporting. And then also, there's no guarantee that the bank will actually forgive the deficient amount. So if the bank had, let's say, $30,000 in closing costs, and then another like $20,000 in arrears, that's $50,000 basically in terms of what they absorbed. And now the bank doesn't necessarily have to, they can approve the short sale, but they don't necessarily have to agree to actually waive their deficiency judgment, deficiency rights. So theoretically, the bank could actually come back after you for that deficient amount years down the road. Now, we are licensed real estate brokers, and in the last real estate recession, we helped a lot of people avoid foreclosure by doing a short sale. So a short sale is definitely a better option than a foreclosure. But we now have a better option than all of the options combined. Now, if you do end up going into a foreclosure situation, that is the worst position you want to be in. It's very extremely negative on your credit reporting. In a short sale situation, you can return and buy another property within a 24-month period in some circumstances, so you can get up on your feet pretty quickly. In a foreclosure situation, it could be 7-8 years before you can go ahead and get a traditional loan to buy another property. So to offset that, there's something called a deed in lieu of foreclosure. So basically, you're going to the bank saying, here you go, bank, here are the keys to this property. I'm going to deed it back to you. No need to go through the foreclosure process. And I pray that you're not going to come after me for the deficient amount. Odds are they're not going to waive their deficiency judgment, and whether they come after you or not for the deficient amount, who knows? And then again, that's going to be reported on your credit, and it's really going to have a negative effect on your credit for not just future mortgages, but if you have to get a car payment, if you need credit cards, you're going to pay higher interest rate on all future loans because of that negative reporting for a foreclosure. So let's jump into a simple example of this person, and then we're going to talk about ways that we can buy your property, get you out of this situation. So for example, let's say somebody owes $225,000. Despite what they paid for it, who cares? They currently owe $225,000. But let's say right now it is worth exactly what they owe. So let's say somebody came in and they bought the property for exactly what they owe on the property. Okay, so you might be like, boom, thumbs up, I'm good to go. But you got to take in consideration, most sales, I think it's like 90-something% of sales actually transact through real estate agents. So odds are you're probably going to have to pay upwards of 6% commission. And if you had to pay 6% commission on $225,000, that would equate to $13,500. Now, in the state of Florida, we have something that's called dock stamps on the deed, and that's 70 cents for every $100 of the price. And basically, it's a state tax that everybody has, and that's usually paid by the seller in many circumstances. So that would equate on a $225,000 home. That equate to $1,575. And then you have title insurance. Now, this is negotiable in many cases depending on what county you're in Florida, but it's all negotiable. But a lot of times sellers are responsible for title insurance, and for the purpose of this example, title insurance plus title fees, you're going to talk about roughly $1,800 based on a $225,000 purchase price. Now, that $225,000 minus all those closing costs is going to equate to just over $208,000. And unfortunately, you owe $225,000. So that would put you into a negative net position of almost $17,000. So that means if you wanted this deal to go through, you would actually have to cut a check at closing to fulfill your obligation to the bank, let the buyer move on with the purchase of the property. Unfortunately, a lot of people who are in this situation do not have these funds, especially if they've stopped paying on their mortgage. Now, let me touch on that real quickly. If you stop paying on your mortgage, you guys are up against the clock, and it's important that you guys are doing something, not just kind of pushing this under the rug, but you're doing something for yourself to get you into a game plan situation of how you're going to get yourself out of this situation. Now, our company is called Creating Real Estate Solutions, and the reason why we named that is because we are able to, as real estate investors, able to get creative in terms of how we are buying properties. Now, we are buying negative equity properties. We are even buying properties where people are delinquent on their mortgages, and in some cases, if it makes sense, we've even been able to get those people paid up to arrears and bought their properties. And what we're doing with these properties is we're renting them out. So if it makes sense for us to make an acquisition on your property, then we're going to go ahead, proceed forward with closing, and we will talk in detail of actually how we're going to structure it, how you're going to be able to avoid a deed in lieu of foreclosure, how you're going to avoid a foreclosure, how you're going to avoid a short sale, how you're going to avoid any negativity on your credit reporting, get you out of this situation, and we will take over and buy your property. In the description below, you're going to find a link to our website. You guys can read a lot more information. As time progresses, I'm going to have more and more videos on this channel as well, so you guys can research and do more research on us as well. And take a look at all that information. But if you guys do want to proceed forward, our contact information is below as well. But you can fill out your information, your house information, everything else on our website, and we will call you as quickly as possible, because we know that a lot of people are in time crunch, and a lot of times we can close properties fairly quickly. But also, if you need some time in your house to move and to strategize, we are problem solvers, and that's what we want to do for you guys. We want to strategize with you guys to figure out how we can help you guys move on with your lives, get past a certain piece of property in your life that's necessarily a drag on your life. And ultimately, we want to help you guys out, move forward in your lives. So if you guys want to take a look at the website below, take a look at it. We are here local in Southwest Florida. We are buying properties throughout Southwest Florida and even in certain other areas of Florida if it does make sense. But we will take a look at any kind of property that is in a bad negative equity position. Anyway, I appreciate you guys watching, and as mentioned, the link is in the description below. And again, my name is Steve Daria, local real estate investor here in Southwest Florida. Thanks for being here.